Hello friends, good morning to all of you, and today in this video we are going to learn about the basic concepts related to the classification of cost and the type of cost over there. So please do confirm the audio video quality at the earliest and फटाफट से वीडियो को like कर दीजिए and share कर दीजिए. And if you have not subscribed to our channel yet, do subscribe it at the earliest and press the bell notification icon so that you get updated whensoever we do upload a new video over there. So do confirm the audio video quality at the earliest, and let me tell you that the CAIIB English full class series is now available and the videos are being streamed on daily basis from Monday to Saturday from 7:30 a.m. onwards over there. So in these videos, we'll be covering the module D. First of all, we have started covering module D from the AFM, that is accounting and financial management for the bankers over there, and this is English live class series for the same. So let's start the session over there. जल्दी से जल्दी session को start कर देते हैं. So the full course is available. Updated sessions are there. So if you are going for JIB or CIB, the full courses Mahacombo packs are available. We will be covering the full courses, full course videos, case study videos, chapter wise questions, mock test, and the complimentary access to the ePDF notes over there will also be there. And if you join up to 25th of the December, you can do apply the coupon code new2023, where you will be getting flat 82% off on all the listed courses over there. The link is on the screen and also shared in the description box below. So do join at the earliest and start preparing for the same without wasting our time, because this time we are to write 4 papers instead of 3, and the new papers and the new syllabus is already being added up, and we are also having the negative marking introduced for the sessions of May-June 2023. So let's start with the session over here. Okay, so it's related to the classification of the cost. We have already covered that what cost is. So cost is related to what? That whatsoever the amount is being paid for the products or the services or the resources, that is said to be what? That is said to be the cost. That is said to be what? That is said to be the cost. So we'll be learning about the classification of the cost. So the classification, first of all, it can be based upon the functional classification. So depending upon the different functions being performed in the organization, we can basically tell what? We can basically learn about the cost function over there. Okay, so first of all, it's related to manufacturing or production cost. So whatsoever the expenses are there, or whatsoever the expenses being incurred in the manufacturing process, that is particularly what? That is related to the manufacturing cost or the production cost. So if we are basically going to manufacture our car, so we basically are having the raw material with us. There was related to other raw material which was being used in manufacturing the products over there, or it may be the case that the direct labor cost over there. So whatsoever the cost is there, whatsoever the cost is incurred over there, that will be covered under the manufacturing cost or the production cost. Second, it's related to the administration cost. Administration cost is related to, let's say there is a supervisor who is basically supervising the project over there. In that case, whatsoever the cost is incurred, whatsoever the rent is being paid for the administration department, whatsoever the electricity expenses being incurred for the administration department, that will also be covered under the administration cost over there. The third one, it's related to the selling and distribution cost. So selling and distribution cost is basically related to whatsoever the expenses being incurred in selling the product over there, in rendering the product over there, that would be related to the selling cost over there. Let's say that we are basically distributing the product to the different retail houses or different wholesale houses over there. In that case, the transportation cost is there. And also, if you are appointing a sales manager, let's say that we have appoint a sales manager whose task is directly related with selling of the product over there. In that case, that is also the selling cost. If you are basically spending on the packaging itself, if you're spending on the packaging itself, let's say the product was basically, we had the product cost that was rupees 100. We were having a product that was costing rupees 100, and now we have spent rupees 5 on its packaging. Okay, so that is also the selling and the distribution cost over there. Okay, next, it's related to the research and development cost. The companies basically do strive so as to make their product much and more better day by day. They're spending upon researching it. So whatsoever the fees is being paid to the researchers or the scientist over there who is researching over the product, who is basically continuously putting efforts so as to develop the product in such a manner that they can make a better product. It may also be the case that you want to launch a new product and you're spending on that. That is also covered under the research and development cost. And even if you are basically developing a website or some algorithm for your product, for your website, for your chain, that will also be covered under the research and development cost over there. The next, it's related to pre-production cost. So when you have not produced the product yet, but you are basically spending some amount on the production, okay, that is also what, that is also the pre-production cost. Okay, the next one, it's related to the classification basis upon time. So first of all, it's related to the historical cost. What is historical cost? Let's say that we have already purchased raw material. We have already purchased raw material worth rupees 1 lakh. Worth rupees 1 lakh. Now that material is already purchased. It is nothing new to do with it. Okay, you have already incurred the expenses on procuring the raw material over there. So that is what cost, that will be the historical cost, because it has already happened in the previous time frame. You cannot basically reduce it, you cannot basically manage it. That would be related to the historical cost. Okay, decisions cannot be made on historical cost as such. You can only basically have future decision based upon the historical cost, because there was nothing like that you can control this cost. There is nothing like that you can reduce this cost, because it has already been incurred. Okay, it's not like that you are to spend over it. Okay, it has already been incurred, so you cannot basically make a judgment based upon that. But you cannot control it, you cannot reduce it. But for the future purposes, you can definitely do what, you can definitely make decisions based upon that. So that is basically the historical cost. The next point is related to the predetermined cost. Predetermined cost, that is actually already being predetermined, that you're going to spend this much amount over that. Let's suppose that I'm going to launch a new product, I'm in the process line itself, or I'm going to manufacture something, or I'm going to render the services over there, and I already know that this particular amount or particular estimated amount I'm going to spend over that particular product to manufacture or services to render. That would be the predetermined cost, and further it is subclassified into estimated cost and the standard cost over there. What is estimated cost? Estimated cost, when I'm having an estimation related to let's say approximately I'll be spending rupees 1 lakh or 2 lakh on the product. So that will be an estimation. That's not an actual cost that is going to be incurred. Okay, it may be above that, it may be below that. If I'm basically assuming that I'm going to spend rupees 1 lakh on the product, it may be the case that I'll be finished up spending rupees 90,000 only, and it may also be the case that I'll be spending more, like I have spent rupees 1.25 lakh on the product itself. Okay, so that is an estimated cost that will be basically letting that is it. This particular cost could be incurred on the product itself. So that's an estimated cost. Okay, just an approximation to the cost itself. And what is standard cost? Standard cost would be like that if I'm having a budget with me that I'll be spending upmost rupees 2 lakh on the product itself and not more than that, that would be the standard cost itself. Okay, I hope that you must have understood the concept. These are the basic concepts related to it, but these are very much important so as to understand the more complex concepts over there. Next, it's related to cost classification for decision making. First of all, it's related to opportunity cost. We have already learned about the opportunity cost in the last video. If you have not gone through that, please do watch that video. Let me tell you again what the opportunity cost, that it's the profit that we have lost when we have selected an alternative of the project. Let's say we were having two projects, project A and project B over there. The approximate profit from project A was rupees 800 and approximate profit from project B was rupees 700. Now we have basically selected project A over here. In that case, we have selected the alternative over the project B. So rupees 700 would be the opportunity cost for the project A, because we have abandoned rupees 700 profit from the project B so as to select the project A. So that will be the opportunity cost for project A over here. Okay, are you getting this point? So that is related to the opportunity cost. Next is related to differential cost. Now differential cost is basically related to what? Let's say that you have made changes on policies or any of the other changes have been made to the production activity, manufacturing activity, or rendering the services, in that case, whatsoever the difference is there, that would be related to what? That would be related to the differential cost. Let's say previously we were producing 400 units and we were incurred with the cost of rupees 4 crore. We incurred a cost expense of rupees 4 crore. But now we have chained up our manufacturing center and we have increased our productivity. Let's say now we are producing 500 units and it is costing us 4.50 crores. It is costing us rupees 4.50 crore. Now the difference between these two, that would be the differential cost. Okay, let's say if we are manufacturing a car, and previously it was costing us rupees 4 lakh per unit. The cost was rupees 4 lakh per unit. Okay, but now the government has changed the guidelines that you are to produce as per BS6, that is Bharat Stage 6 accordance. You are to manufacture the cars, and there is an additional expense of rupees 25,000 per unit. Now this 25,000 per unit that we are spending more, that would be the differential cost, because we have changed our activity, we have basically changed our process, or there is some decision that we have already changed, due to which the cost has now increased. Okay, so that will be the differential cost over there. The next point, it's related to the common cost. Now in this particular image, you are able to see that there are different people working on the different desks. If we consider this thing particularly, that in a particular building that we are having different department over there. Now electricity is being consumed as a common. Okay, rent is being rent paid for the building is in common. Now the cost of the rent, the cost of the electricity that we have paid for, it's not for some particular product or some particular service over there. It's common to all. So such type of expenses, such type of cost incurred is what? It is a common cost. It's the common cost over there. Then it's the sunk cost. Sunk cost is somewhat related to the historical cost. We have understood the historical cost. Historical cost was related to that the expenses that have already incurred. Okay, they do not basically change the, we cannot basically reduce them, we cannot control them. Sunk cost is also the same thing. Sunk cost is also the same thing, where we have already incurred the expenses and we cannot reduce it, we cannot control it. That is the sunk cost itself. Then it's related to the joint cost. What do you mean by joint cost? Let's say we are going to produce the product P1. And further, up to some certain stage, we were basically producing the product P1 only. But after some particular stage, it bifurcated into two different products. Okay, we basically produced product P1 and also the product P2 is produced. Now out of the product P1 manufacturing process, we also manufactured some other product. So that would be related to the stage up to which there was no bifurcation in the process. The cost would be the joint cost. The cost up to this particular point, it will be the joint cost over there. I can quote you an example. Let's say that you were to basically produce the paneer out of the milk. We were having the milk with us and we wanted to produce paneer. That was our final product. But while producing paneer, we also basically produced the buttermilk. Okay, so up to some certain stage, whatsoever the expenses were there, okay, so that would be related to what? That would be related to the joint cost. That would be said to be as joint cost over there. Okay, so that is the classification for decision making. Next, it's related to on the basis of accounting period. First of all, it's related to capital expenditure. What do you mean by capital expenditure? If I'm spending on any of the asset which is going to be there, which I'm going to use for a period longer than 1 year, that would be said to be what? That would be said to be capital expenditure. If I'm basically using some product, if I'm using some asset over there for more than 1 financial year, that would be the capital expenditure. Let's say that we have basically imported a machinery. Now this machine is we are going to use for a period longer than 1 financial year. That will be the capital expenditure. Other than that, if you're going to basically have an asset which you're going to use for 1 financial year only, that you're maximally consuming that particular asset in 1 financial year, that will be the revenue expenditure. So capital expenditure, like we have spent on machinery or some other assets. Revenue expenditure would be related that we are spending from day to day basis so as to maintain our operations. So that would be the revenue expenditure. Next, it is based association with the product, the cost association with the product over there. So first of all, it's related to product cost. Now, whatsoever the cost that is basically associated with the product itself, that will be related to what? That will be the product cost. That will be the product cost. So if we are to basically manufacture a pen over there, we are having a pen that is need to be manufactured over there, and we basically are having the raw material, plastics, ink. Okay, so this would be related to what? That would be the product cost, and also the direct labor cost. That will also be the product cost. That will also be the product cost over there. The second point is related to period cost. Now, over some of the expenses, we are not paying over on some particular time, but we are paying for some particular period. Let's say that you are paying the salaries. You are paying the salaries. Now, salaries are being paid for some particular period. Salaries are being paid for some particular period, and same goes for the rent. We are not paying the rent. Let's say the product was basically manufactured in 7 days. The product was manufactured for 7 days. So should we be considering the full salary cost into it? Okay, and should we be considering the full rent cost to it? No, it should not be the case. We will be considering the expenses in such a manner that the manufacturing process was completed in 7 days. So the cost which was incurred on the salaries and the rent will be considering only a part out of it. We will be considering only a part out of it, because it took only 7 days out of the 30 days so as to manufacture the product over there. So we will be considering the part of the salaries and the rent over there which was spent for 7 days only. Okay, so that would be related to the period cost. Next, it's related to by degree of traceability to the product over there. Now, let me just tell you, if there are direct traces, that we can basically get an idea that the expenses were incurred on some particular product itself, that we can get the trace out of it. Like we can trace the location itself. Geolocation can be traced by using GPS over there. The same way, if we are having the traces related to that where those expenses were incurred, that would be related to what? That would be related to the traceability of the product itself. So first of all, it's related to direct cost. Direct cost is what? Which is directly spent on the product itself. Which is directly spent on the product itself. So if we have basically paid for the raw material, carriage inward, or if we have paid to the direct labor over there, or if we are having any of the direct expenses over there, that will be covered under the direct cost. And other one, it is an indirect cost that we have not paid directly, but it is spent indirectly over there. Let's say there is indirect labor. If we are spending on some material which are basically required so as for the maintenance of the machines over there, so that is related to what? That is related to indirect cost over there. We have already learned about the direct and indirect in our previous video. If you have not gone through that, kindly please go through that video so you can learn the concepts related to the same. Then further, it's related to the by change in activity or volume. By change in activity or volume. So there are some type of the cost in which even if you do change the activity or the productivity level, that is not going to be altered at all. Let's say that you have paid the rent for the building. Let's say we are paying a rent of rupees 1 lakh for our manufacturing building, for our manufacturing factory over there. Okay, now even if you're producing 400 units or you're producing 600 units, even if we basically increase the productivity to 600 units, it is not going to be altered. The rent is not going to be altered based on the productivity. Okay, if you're not basically getting some new space and you are basically producing the units over there in the same building over there, in that case, even if you have increased the productivity, it is not going to basically change the rent over there. So that is the example of the fixed cost. Okay, second one is related to the variable cost. So variable cost is related to what? So when you will be changing the activity level or the productivity level or the volume of the units to be manufactured in the hub itself, the sum of the material cost is going to be changed itself. It will gradually increase or decrease over there. Let's say previous manufacturing, we were manufacturing 100 units over there, and now we increase the manufacturing to 200 units. In that case, the material cost that let's suppose we were paying rupees 50 previously, and now we will be paying rupees 100 because we have increased our productivity. The material cost will also rise up. Okay, risen up. Okay, in also the other case could be that previously we were producing 100 units, now we are manufacturing only and only the 50 units. Now our manufacturing cost, our material cost will basically lower down. So that is a variable cost. That is a variable cost because it is varying with the activity or the volume being manufactured. Next, it's related to the semi-fixed cost. I already caught you an example in the last video too, that's related to the electricity bill. Now let's suppose that up to 1000 unit, if you basically do consume up to 1000 units, it will cost you rupees 7 per unit. It will cost you rupees 7 per unit over there. But if you go beyond 1000, let's suppose above 1000 up to 2000 units, it will cost you 10 rupees per unit. It will cost you 10 rupees per unit. Now let me just tell you that up to some certain point, the cost is fixed. The cost is fixed, but after some certain point there was increase, or there was basically decrease, or the cost is varying, such type of cost is said to be what? Such type of cost is said to be semi-fixed cost. It is said to be the semi-fixed cost or mixing cost. Okay, so that would be related to it. But let me tell you, if we do basically compare the variable cost and the semi-fixed cost, if we do compare the variable cost and the semi-fixed cost, in both the cases, if we look at the variation factor, variation in case of variable cost would be much more higher than compared to the semi-fixed cost, over there. Okay. Next, it's related to some of the questions based upon this. Let's solve these questions. Identify the different ways in which total product or service cost can be classified into. We need to identify the different ways in which the total product or service cost can be classified into. Element or function based, accounting period based, controllable or non-controllable cost, all of the above. So which of the following would be the right answer? Kindly please do mark the answer at the earliest along with the question number, that is 16th. Kindly do answer at the earliest. Which of the following would be the right answer? So we need to identify the different ways in which the total product or service cost can be classified into element or function cost, accounting period cost, controllable or non-controllable cost. So we can classify them into all. We can classify the cost in them into all. Okay, like there is element cost, with different element we have learned about. It is also functional based. It is also accounting period based. Controllable costs are those costs which can be controlled by the manager or by the organization itself, and non-controllable costs are such costs which cannot be controlled. Like if you're basically spending on advertisement. Now if you're spending rupees 5 crore on advertisement, you can reduce the cost because it's in your hand. Okay, it's your wish if you want to advertise the product that much rigorously or not. Okay, so you can reduce that cost. That is controllable cost. And what about non-controllable cost? The cost which cannot be controlled. Let's suppose we want to increase the productivity. Now in that case, it's not controllable. If we are to manage the raw material cost, because we have to pay for the raw material actually na. Okay, so that cannot be controlled, so that is non-controllable cost. Okay, so option D over here would be the right answer. Option D over here would be the right answer in this regard. Now let's move to the next question. It says, which of these statement is correct regarding sunk cost? Which of the following statement is correct regarding sunk cost? Relevant for decision making, not relevant for decision making, cost to be incurred in future cost. So which of the following would be the right answer? So sunk cost is related to what? Which has already been incurred, and you cannot control it, you cannot reduce it, but you can make decisions based upon it for the future purposes. So it is relevant for decision making. Yes, it is relevant for decision making. It is not relevant for decision making, so this would be wrong. Cost to be incurred in future, but it is totally opposite, because sunk cost is related to that the cost has already been incurred. Okay, so option A over here would be the right answer. Option A for question number 17 would be the right answer. Okay, next it says, by function costs are classified as. By function the costs are classified as production cost, administration cost, selling and distribution cost, all of the above. Which of the following would be the right answer? Which of the following would be the right answer? If you look at the function classification of the cost, it was related to what? It was related to manufacturing cost. It was related to manufacturing cost, administration cost, selling and distribution cost, and also the R&D cost was there. Pre-production cost was there. We have already learned about those. So option D would be the right answer. Option D over here would be the right answer for question number 18. Now let's move to the next question. Question number 19 over here. The cost of having the materials brought to the organization is known as what? Carriage inward, purchases, carriage outward, none of the above. So it is carriage inward that we pay for. So option C over here would be the right answer. So when you have basically brought the material, when you have basically brought the material to your premises, to the organization for the manufacturing purposes, okay, so that would be what? That is the carriage inward. So option C over here right away would be the right answer. Next question, it says, which of the following are the costs that are directly associated with the production processes in manufacturing organization? That are directly associated with the production processes in the manufacturing organization. Production cost, non-production cost, purchases, none of the above. So it's related to production cost, which is directly associated with the manufacturing organization. So option A over here would be the right answer. Option A over here would be the right answer for question number 20 over here. Question number 21, it says non-production cost includes what? Non-production cost includes what? Administration cost, selling and distribution cost, research and development cost, all of the above. Non-production cost means what? That is not basically related to the production or manufacturing of the product. That is something else. That is something else that you have spent upon. Okay, so it's the administration cost also, which is basically the supervision purposes. Okay, you have spent upon the administration purposes like stationery, pen. You have basically some other expenses related to the salary of a salesman that will be covered under selling and distribution cost. You have paid to the scientist, or you have paid to the researcher who is basically going to research for the product over there. That is research and the development cost. That is R&D that you are paying for. Okay, so all these costs are not related to what? All these costs are basically related to what? These are not related to the production, so these are covered under the non-production cost. Okay, so option D over here would be the right answer. So question number 21, option D would be the right answer. The next question, it says, which of the following statement is correct related to cost? Which of the following statement is correct related to cost over here? The costs that can be clearly identified with the cost object known as direct cost. Okay, the cost that can be clearly identified with the cost object known as direct cost. Yes, it is true. That is known as direct cost over there. Indirect cost cannot be directly attributed to a particular cost unit. You cannot directly attribute it to the cost unit, because indirect cost is related to what? It is basically not added to the product cost itself directly, not added to the product cost directly over there. Indirectly it can be added to it, but directly it cannot be added to it. Okay, and the third one, it says variable costs are the costs that tend to vary in total with the level of activity. So whenever you will be changing the level of activity or the volume over there, the variable costs are going to vary over there. So that is also correct. So all the three statements are correct. So option D would be the right answer. Option D over here would be the right answer. Now let's move to the next question. Administration costs are the cost of providing administration services for the entity. Administration costs are the cost providing administration services to the entity. That is quite true. So option A is the right answer. That statement is true. The next we are going to cover, it's related to costing and its types. We are going to cover costing and its types. First of all, what is costing? What is costing? So costing is method or the techniques that we use so as to ascertain the cost of goods or services or rendered. Okay, so that is costing. We have already covered the concept of costing again. Okay, let me just remind you that we have already learned the concepts of cost, costing, cost accountancy and cost accounting. Okay, now what is job costing? What is job costing? So we basically do specify the cost in terms of specific jobs. Okay, like we are having the different jobs or different orders which are not comparable with each other, Let's say that we are having a manufacturing chain, and there are different jobs to be performed, and these jobs are not comparable to each other. These are the different 4 jobs which are to be performed. Now we'll be saying that on this particular job what amount we have spent, and further on this particular job what amount we have spent or what costs are associated with it. Okay, so we will be basically having the different jobs, specific jobs which are not comparable at all, and further we will be ascertaining the cost based upon those jobs itself. Okay, so as to basically having a final cost of the product, so as to basically get the final cost of the product over there. So that is basically related to what? That is related to the job costing. The next it says One another example I can quote for you related to the same. That's related to that you go to a tailor. You go to a tailor. Now basically tailor is sewing the suits. The tailor is sewing the suits for every different suit, because depending upon the different demands of the customer, he's basically charging differently. He's charging differently, ascertaining the cost which may be there. Okay, ascertaining the cost which may be there. Like the demands may vary from customer to customer. He basically charged rupees 500 from one customer, 600 from the another one, 800 from the third one. Okay, it may be differently charged as per the costings, as per the designs which may be there in the different jobs. Okay, so we can say these all are the different jobs. All the suits which are being sewed by the tailor itself, all being considered as the different jobs, because he is working differently on different jobs as per the requirements over there. So that can also be covered as the job costing. Then it's related to the contract costing. Now, contract costing is somewhat similar to that of the job costing, but it's quite for a longer term. It's for the longer duration. Okay, like job costing is there for the shorter duration. Like if I just gave an example related to the tailor over there, tailor may be sewing the suit in 1 day or 2 day in week itself. Okay, but the contract costing is related to what? It's related to a longer duration period. It's related to a longer duration period. Let's suppose that we are having a contractor C1 who basically he has a tender with the government that he is to build the road infrastructure. He is to build the highway over there. Now he will be getting he'll be basically has filled the tender with the government over there, and the project was allotted to him. Now the same contractor went for the another project. Now would he be charging the same price for the another contract? No. The contract cost would vary from project to project, from contract to contract. Okay, so that is going to vary, and he will be basically completing his project in 2 years, 5 years, 10 years, whatsoever the time period there is, but for a longer duration the time period is. Okay, the concept is related to contract costing is what? That the prices may vary from project to project, from contract to contract, and the contracts are for a longer period. Okay, so that is related to what? That is related to the contract costing. When you are having a particular contract with you and you have to accomplish that particular contract, and you will be charging differently based upon the complexity of the contract itself. The third one is related to batch costing. Now batch costing is where the manufacturing hubs do manufacture the same kind of product in batches. Now batch is related to what? That you are basically manufacturing similar product. We are having a pen over here. Okay, let's suppose the company is manufacturing 1 lakh units of the pens, 1 lakh units of the pen on daily basis, and they name it batch, and they name it single batch, because it will not be basically required that they will be a certain cost of single pen over there. They will be basically looking for what? That how much amount was spent for manufacturing 1 lakh pens over there, and they named it as batch 1. Let's say they basically termed it as B1, another batch was B2, B3, and so on. Okay, so on. So that will be related to what? That will be related to batch costing. We are looking for the costing of the batch itself, but not for the individual unit over there. And if we say that the total amount spent on the batch itself was 3 lakh rupees, for single batch the amount spent was rupees 3 lakh. Okay, now what will be the unit cost? It will be the total cost of the batch, the total cost that is incurred on the batch, divided by the number of units in the batch. That will be related to what? That will be related to rupees 3. So the unit cost would be rupees 3 over here. Is that clear? That is a batch costing concept. Next, it's related to process costing. It may be the case that the product may go through the different stages or different processes. Like if we are going to manufacture a product, we can take example of hosiery. Okay, let's suppose first of all they are having the fabric with them. And further they were having the stage where tailor is sewing the fabric, and they are having the stage where the pressing is being done, or we can say different actions being taken by some other person, but it's a different stage over there. Okay, this was the first stage, this was the second stage, and third one was related to the finishing stage. We can say finishing stage it would be, and the fourth stage was related to packaging. It was related to packing or packaging. Okay, So these were the different 4 stages over there. Now for each and every different process, for each and every different stage, we will be ascertaining what? We will be ascertaining the costs related to it. We will be ascertaining the cost related to it. So that will be what? That will be the process cost. Now in case of process costing, a single process may basically be having multiple jobs associated with it, so it is basically different from the job costing. It will be basically different from the job costing, because in case of job costing, we were looking for single job that is to be basically done over there but those all jobs were not comparable. But in this case particularly, the process is there, different process is being undertaken, and a different process may be having different jobs associated with it. Okay, so that is a process costing. So where a product passes through distinct stages or processes, the output of one process being the input of the subsequent process over there, it is frequently desired to ascertain the cost of each stage or the process of the production over there. So that is process costing over there. Okay. Next is related to what? Next it's related to the operating costing. Now in case when the services are to be rendered, then the goods to be produced, in that case operating cost is being undertaken. It is being undertaken because in case of services, it's not like that we are having raw material with us, but it's related to that you are having the operation cost. Now if you are providing health insurance coverage, it will not be related to that you are having some kind of raw material with you. It will not be there. You'll be basically having stationery, you'll be spending upon stationery, must be spending upon marketing, you must be spending upon catering your customers over there. So that will be related to what? That will be related to operations. That is related to being operations, different operations that are to be performed. So that's related to what? That's related to the operating cost. That is related to operating cost over there. Okay, next it's related to departmental costing. Sometimes what happen that we are having the different departments in the company itself, let's say we are having the department D1, we are having the department D2, D3. Now they are all working separately but for the some common goal. Okay, in that case it may be the case that we are curious about the profitability of the department itself. In that case, we'll be basically undertaking departmental costing. Over there. Okay. Next, it's related to multiple or composite costing. Let's take an example of bicycle. Let's suppose there are multiple parts or multiple materials which are to be used in case of manufacturing a bicycle. Okay, so it will not be the case that the company itself is manufacturing each and every part of the bicycle itself. Let's say that they are basically purchasing the different bike parts from the different companies. We are considering 4 parts: P1, P2, P3 and P4. Okay, and the company over here is basically assembling and further furnishing the bicycle at their end. Okay, now in that case the goods are to be purchased from the other manufacturers, and further then they will be assembled, furnished, and further they will be sold over there. So in case of multiple costing, which is also known as the composite costing, in that case particularly we do have some certain processed parts from the other manufacturers. Okay, and these all are costed separately. So that is known as what? That is known as multiple or composite costing. Over there. Then it's related to operation costing. Okay, so this method is adopted when it is desired to ascertain the cost of carrying out an operation in a department. So when we are basically working in a single department over there, and we want to ascertain the cost of carrying the operation in that particular department. Okay, so that is particularly what? That is the operation costing for a single department. So as to carry out the functioning of that department, whatsoever the expenses are being made, that is called as what? That is called as the operation costing. Now when we consider multiple departments and we want to look at the factor that how the departments are basically charging or spending, in that case that is departmental costing. But when we are concerned about when we need to ascertain the cost of carrying out of operation in department itself, it is known as what? It is known as the operation costing. Okay, so operation costing is concerned about single operation in the department itself. Okay, because let's suppose we are having department D1 and multiple operations O1, O2, O3 being performed, and we are concerned about O1 only. Then what type of costing would be applicable? It will be the operation costing. It will be the operational, not operational, it will be the operation costing. Okay, but when we are concerned about the costing of the full department, it will be the departmental costing. It will be the departmental costing over there. Okay. Now let's solve the questions based upon it. Costing and cost accounting is the same thing. The statement is true or false. Costing and cost accounting is the same thing. Now I already told you costing is a technique and the process so as to ascertain the cost. Whereas if we go for the cost accounting is basically related to where we do basically put the entries, accounting entries related to the expenses over there. We do record them, examine them, summarize them and study the same. That is cost accounting. So that is totally separate. So this statement is false. So this statement is false over there. So option B over here would be the right answer, that this statement is false. Okay. Now let's move to the next question. Question number 25 over here. Method for ascertaining the cost of goods and services is known as costing. I already told you this question has been basically, we have been revising this particular concept from time to time. So it is costing. It is what? It is costing. Next question, it says, which type of costing is a costing method applied where work is undertaken to customers' special requirements and each order is of comparatively short duration? It will be batch costing, job costing, process costing, or none of the above. The answer will be job costing, because we learned about the job costing now, in which particularly a job is to be done and further it is for a shorter period. Otherwise, if it is for longer period, what it would be? If it is for a longer period, what it is said to be? It is said to be contract costing. For a longer duration, if it is said to be contract costing. And if you are producing the similar products in the bulk, that is basically covered under the batch costing. And when the product is to go through the different processes which are related to each other and the output of one process is the input for the another process, that is particularly related to what? That is related to process costing. So option B over here would be the right answer. Option B over here would be the right answer for question number 26. Next question, it says, the cost per unit manufactured in a batch is calculated by total batch cost divided by the number of units in the batch. I already told you, if we are basically having 50,000 units in the batch, and the total cost incurred for the batch production, it was rupees 3 lakh. So what would be the cost of the unit? It will be the total cost incurred, that is 3 lakh over there, and further divided by the number of units, that is 50,000 over there. So rupees 6 would be the right answer. Okay, so in this case particularly, it will be option A. Option A would be the right answer. Okay, so next question, it says, the cost per unit manufactured in a batch is calculated by, we have already gone through the same. Okay, it says, which costing method is followed in service organization? Which costing method is followed in service organization? Job costing, process costing, operation costing, or operating costing? See, job costing was related to what? When you have to do a job and whatsoever the cost incurred over there, that was job costing. When the different processes are over there, different stages are over there, and the output of one process is the input of the other one, that is the process costing. Operation costing was related to when a single operation, the cost incurred on single operation in the department itself, that was operation costing. And the operating costing is there when we are providing services rather than manufacturing the products, then it will be the operating costing. So option D over here would be the right answer. Option D would be the right answer for question number 28. Okay. So that would be all for this video. I hope that you must have enjoyed the video and the content of the video over here. If you have liked the video, do like this video at the earliest and share the video among your friends and colleagues who have been preparing for JIIB 2023. The full courses for JIIB, CAIIB is available in English only language and also available in bilingual Hindi mix English language. Do join right now and start studying for the same. You'll be getting the full course videos, case study videos, chapter wise questions, mock test, and the complimentary access to the ePDF notes. You'll be getting validity of 13 months against the validity of 12 months over there, and also you will be getting flat 82% off if you do apply the coupon code new 2023, which is applicable till 25th of December. Do apply the coupon code and join the courses right now, because this is the lowest cost we are offering the courses at, and do get the benefit for the same. So that will be all related to this video. Thank you so much and see you again in the next video. Okay, so that will be all.